Well, happy Thursday to each and every one of you. Welcome to our long diagonals and verticals class, long verticals and diagonals class. I'm Connie here. It's the first class of the new year. I'm happy to have you join me here today. How many of you, tell me if this sounds familiar to you. Go ahead and answer in the chat. You like the idea of long calls and long puts on things that you think are moving pretty directional pretty quickly. But you find yourself in a situation where maybe they're not the most profitable for you, or you struggle to make it a consistent, profitable trade for yourself. But we're going to talk about that a little bit here today, see how long verticals might help you in that regard. Now, I am joined in the chat by Barb Armstrong. Happy Barb's here. Sometimes we call ourselves the dynamic duo, but Barb's great friend and colleague for many years, very educated and knowledgeable in the markets. And so as you have questions, go ahead and chat those in. I'll keep my eye on the chat, try to make sure I catch your questions there. If there's some things I can't quite get to, Barb will help me out with those as well. Now, I hope you're following us on X. I'm Connie Hill CS. She's Barb Armstrong CS. She's put her handles out in the chat there for you. Would love to have you follow along as we post educational content throughout the day so that you can kind of see some of these observations that we might be seeing in the market. It's a nice thing that you can participate in. All right, let's go ahead. Let's go through some important disclosures, and we will get down to our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for education and informational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application. It is for educational purposes only. I think it's a fantastic tool to test, maybe do some practice trades out in that paper trading account so you get the idea of how some of these strategies work. Investing involves risk, including the loss of principal. When we talk about probabilities, keep in mind they are theoretical in nature. One difference about the Paper Money software application that we'll be using that's different from your live account is that options that are short won't typically be assigned early in your paper account, but that's not true of the real world. They can be assigned early, and you need to be aware of that. All right, actually step here. Let me see if anybody of you answered in here, if you find yourself kind of feeling similar to that, what I described earlier, that you like the idea of long calls, long puts, you like this idea of theoretically unlimited gain on a trade, but that it just seems like it's a hard thing to do. All right. Let's see. So yeah, Kevin says, I do. It seems like if I buy a call or a put, movement stops or reverses, right? It's moving along really well. You think you find a good entry and then it kind of fizzles out on you. Yeah. I'm going to tell you a little bit about somebody I used to work with. His name was Jerry. Well, we'll call him Jerry. And he loved the idea of long calls and long puts, but he was terrible at it. Now, he's not here in our class, so I can say that, right? He just didn't have the time for it. He would see things too late. And so as he tracked in his journal, he wasn't doing that good with that particular strategy. However, one thing we worked on was, well, let's throw some verticals in there. What if you did a long vertical or a short vertical instead of looking for that huge directional move, had him track his profits with it, and he started doing better than he was just doing a long option. And I really think that's where long verticals kind of fit into the picture, is if it doesn't move exactly like you think it's going to initially, that's all right. Okay. Now, as we talk about verticals, this is about verticals and diagonals here on this, but as far as long verticals go, typically you're going to have that long option, and then you're going to sell something a little further out of the money. One thing that's nice about that is it lowers your net debit, especially on some real expensive stocks, and allows a trader to participate in that move. They will have a bullish bias, maybe even a little bit more so than if we say do a long call diagonal. So you just want to keep in mind how this works. On the long call vertical, we're working with expiration dates that are the same. That's what we will be working with here today versus expiration dates that are different, which is typical in the, say, a long call diagonal. Let's hop over to Thinkorswim. and just take a quick look at the markets. And then I want to do a little bit of comparing here with, say, just a long vertical and a long call. Just looking real quick here in the chat. Somebody would like to see, George, can we use an OCO order on the option or alternatively on the underlying? So George is requesting maybe we do a one pencils other order. Yeah, we'll take a look at that. We can certainly do that, George, not a problem. Newsar says, yeah, it's kind of hard to figure out the mechanics sometimes. Yeah. So we're just going to be talking a little bit here about the Bacon 6. Now, it looks to me like the market's pretty flat. 0.0%. It's been kind of fluctuating up, a little bit down, a little bit up. Looks like it's kind of back on track. I've got a 10 moving average here. That's the blue line. The 30-day simple moving average is this red line. And I think it can be helpful to help you identify trends. What is the overall trend of the market doing? Shorter terms going up, and this 30-day period is more of an intermediate average. Looks like the market's going up bullishly there as well. And so you can kind of get your thoughts thinking, well, if the overall market's doing this, maybe those are going to be the kinds of stocks we're going to look for, meaning in this case that we'll be looking a little bit more bullishly. Let's look at the NASDAQ here. Sometimes it's interesting. Sometimes the NASDAQ and SPX kind of trade in sync, and the Dow and the Russell 2000 kind of trade in sync. Looks like the NASDAQ here is down 0.6%, so it's down a little bit more. You'll notice on the moving averages here, they're not going up as sharply as they were on the SPX, so maybe a little bit more weakness is what we're seeing here in the NASDAQ. Let's just look at the Dow real quick. Looks like the Dow's up 0.42%. And let's see if the Russell is still following it. Oh, yeah, looks like the Russell's following it up 0.55%. Okay, so would you look at that? The Russell 2000, the small caps, look like they're putting in a new high, a new 52-week high, which is nice to see. Yeah, Centix says it looks like the SPS has been kind of hitting that 69 area as a level of resistance. Yeah, just kind of right up here. And yeah, yesterday it hit a new high as well. Well, let's take a look at one of our stocks here. The first one we're going to take a look at is Capital One Financial. What's in your wallet? You might think of that jingle. In any case, this is its chart. We're looking at 6 months here. And I have implied volatility showing here because with options, that's one of the critical variables. We're looking at the impact of time, volatility, price action, and this options reaction to each of those areas. And so it's kind of helpful. Okay, we see the implied volatility going up here a little bit in Capital One. So that gives us the idea that things are not too terribly scary, or that there's not a lot of jitters as far as what's going on here, and that the move has been up, meaning there's an expectation of up movement, but not too extreme. I mean, the high here is at 0.48. Right now it's at 0.32. And let's say maybe its low point in the year would be something similar here, 0.29, 0.29. So it's kind of down in a lower area of volatility, which typically means options are not going to be tremendously expensive. Yeah. Now, Stace Gold says, we've got earnings coming up here, and that's something we definitely want to be aware of. Their earnings are not until the 22nd, after the market closes. So the intent on this trade would be, let's see if this trade can complete before earnings announcement is coming around. The intent is not to hold it over earnings, but you're absolutely right. We want to be aware of it. See if we can exit the trade before then. If you're somebody that doesn't like to hold over earnings, and we'll just say the intent there is that we aren't going to hold over earnings. All right. How can I add my IV to my chart? Yeah, this is just a study. We come up here to the beaker, click on the beaker, brings us to our edit studies. And this is called implied volatility abbreviated. So if I just go IMP, it's going to be the second one right here in line. It brings it up on this alphabetic search menu. Okay, so that's how you get it up there. Let's get this back full screen. All right. This stock we might be thinking bullishly up, right? And one of the things we look at is, well, do we have an entry? Do we have an entry that we like? We could have a breakout of a pattern, breakout of resistance. We could have a bounce either off support. And it looks like on this one, maybe what we're seeing here, this did have kind of a nice little move here, just a little bit of a pullback. And today it was looking like it wants to recover from the little pullback that it had yesterday. Okay. Now this isn't, both of these candles are not that big. It has kind of a look of a piercing line, which is a candle that's bullish this day, like today, and it goes well within the body of the previous day's candle, which is bearish. And it's in there a little bit, but because they're so dinky, it might not be that as. I'd say it's a weak piercing line, but we're going to go with it that it's a candle that looks like it's trying to bounce, trying to burst on us. Okay. Now this stock, it's $255 stock. And if we're going to look for a move before the 22nd, we're looking for maybe a couple of weeks. Now, as we come over here to the trade tab, if you want, you can pick through the weeklies. They're not that liquid. So we're going to be using the February options here on this one. Okay. And as we look here, look at the open interest. I've got my delta column, open interest, volume. This probability is probability of expiring out of the money. And then we've got what's called our Theo price here. And our Theo price is allows us to do some calculations and play what if with the stock. All right, so let's just take a quick look here. Suppose we're bullish and we thought, oh, I think it's got some good directional move because you like the look of, say, the moving averages. You think they're going up, looks like it's bouncing. And we've got some choices here in $10 increments. Well, the stock's at 255 right now. And so suppose you're interested in just doing, say, a long call. It's going to cost us in the neighborhood. We could probably get a midpoint price here of 1375, right? The midpoint between the bid and the ask here. And so on this, it's kind of an expensive option. We're going to be tying up $1,400 just doing one contract. But if we say buy vertical and say, all right, let's buy this option, sell the next one out, and you can even go further out. You can spread them out further if you like. I kind of like the $10 strike difference here on this particular one. Would pay $540 for it. So that's not nearly as much invested in it as if we were putting in $1,400 for just the long call option. Now we're going to play a little what if here for a moment, okay? What if the stock maybe makes a little bit of a movement that we would like it to make? Okay, so let's suppose, what if the stock maybe went to, it's at 255 right now. What if it goes, say, to 260? Now that's not percentage-wise a great deal, but let's just kind of take that, suppose it, okay? I'm going to select on this area here, and I'm going to highlight it. If you don't have the column of Theo price selected, like I do here, where is it over here? Then this little area here in the middle is not going to show up. That's our little calculator area. And so if you don't have that, and if you want to see it, you've got to have that column showing, okay? So go into your column and have it be one of the showing columns there. Let's get rid of that. And let's bring up what that calculator looks like. And this is where we can play what if. So what if the price of the stock gets up there to, say, 260, okay? So we're going to adjust the price of the stock. I'm just going to do it $5, okay? We'll let it round the pennies up there. What about implied volatility? Do we think it might adjust that much? It may or may not, okay? It might continue to float up a little bit, just following the price action, but we're not expecting like a major big ramp up. Maybe next week, getting closer to earnings, we might expect that implied volatility to ramp up a little bit more. But say in the next few days, it might not ramp that much. Okay, so as we come back here to our calculator, we've got our $5 move. Let's just say maybe it goes up 2%, which is not a whole lot. Okay, but we'll let that reflect in the theoretical price of the option. And I'm going to say time-wise, this is today. No, this is tomorrow, actually, right? Today's the 7th. Tomorrow's the 8th. What if we just kind of go out in time here to say next Monday? And that's going to be the 12th of January. That'll be Monday the 12th. What would the price of these options look like? Okay, so this $14 option, it might go up maybe almost $3, not quite, to $16.93. So it may have a little bit of an increase if the stock does exactly that in that amount of time. Okay, so that's interesting to know. And then on a vertical, if we wanted to say, well, what would the vertical look like? Let's just change this to vertical for just a moment. And we'll go our 250, 260. And it's saying, well, on 590, which is what the midpoint would be here. Actually, 535 is what it's showing. It may go up into the neighborhood of about 605. So we're like, okay, a little bit of move on both of them, nothing to be stupendously excited about. Okay. What if this same move took place, but it took it longer? Okay. What if in this case, suppose instead of Monday, let's go out, today's the 7th, let's go out to the 21st. Okay, so let's go out 2 weeks and say, what if it goes out that long? What happens? Well, in this case, we're just barely making some money here. Time decay really wears down that price of the option. On the spread, it's going to probably look similar. Let's change it here back to vertical. And we've got our 250, 260. That's interesting. It's almost the exact same price on that, isn't it? So we don't really know what the stock is going to do. We just have an expectation of what we want it to do. So if it dilly-dallies or it doesn't go that way quickly, it makes it really difficult to make money on a long option. When we do it in a spread, it makes it a little bit easier on us. Okay, let me change this back here. We're going to put that back to a single because I want you to see that data. We would be risking, in this case, 540 to make what? $10 minus 540 gives us what? 460. And that just changed a little bit down to 535. So, 565. So we have maybe a little bit more to gain, right, than maybe what we might have at risk here. All right, we're going to cue this up. In this class, we're going to say that we can risk up to $2,000 per trade. All right. And we may have to exceed that on some diagonals that we might do, but we'll say we can risk $2,000 in any trade. If that's the case, how many contracts could we do here? We could do 3, right? Because if we lost 535 3 times, that would be less than $2,000. If we did 4, it would put us over our limit. All right. Let's come down here. Let's do a first trigger sequential, and let's put in, and actually, we'll put in the first triggers OCO because somebody wanted to see a 1 councils of the order and how that might work. Okay. So you line up your trade. We've got it good to go here. We changed our advanced order from a single to a first triggers OCO. And then we're going to create 2 opposite orders. And then we're going to configure these. Typically, we'll configure 1. If the trade goes our way, does what we want it to do, let's put in an exit point. Many times we'll do it based on profit target as opposed to movement of the stock. Okay. Now, I'll ask a lot of times in classes, if you could get a certain percentage of the trade, what would that be? If you could say, I get 50% of it, lock in the gains and walk away, 60%, 70, 80, 90, you got to decide. It's really hard to get 100% out of it, though. Okay, so that's why we're going to say, well, satisfied if we get a little bit less. Now, I just decided to lock this in at 525 because I know it was dancing around on us, okay? And so we'd be risking 525 to make 475. Okay, I may have said it incorrectly previously when we were looking at 535, 545, okay? So it'd be 475, which is almost risking $1 to make $1. Well, of that 475, if we could get, George letting us know when we did that calculation on the vertical, that the slippage on the vertical was about $1. Yeah. What if we could get on our 475? What if we could get, that didn't click in, did it? 4.75 times, what if we got 70%? Would we be satisfied with 70%? Your number might be different for this example. We'll use 70%. So 3.32, let's add that to our current 5.25, and that's when we might want to exit. We'd say, if we can get that, we'll be happy campers, be on our way for kind of the target exit. Let me see, that was 857. So we're going to put this one in here at 857. Make it good till canceled. Now, suppose things don't go our way, that this thing fizzles out, it doesn't move, and we were like, if it's not going to move, we're just going to get out. Some people might do that maybe at about a 50% on a long option. They might cut it there and say 50%'s gone, I'm out. You could do the same thing on a vertical, okay? For our example purposes, let's do that, okay? Let's say, okay, what is half of 5.25 times, we'll just say 0.5. Okay, if the value of that spread gets down to 262, let's get out. Okay, 2.62. And then instead of this being a limit order here, we want to make that a stop order. All right, so we're going to choose stop. That means if it gets to that value, it'll trigger a market order, get us out of the trade. Hopefully it'll be close to 262, but it's not guaranteed to be that price. All right. And then we would make that good till cancel. Then whichever one it hits first, that's the one that executes. Okay. It either hits our stop or it hits our target. And if we needed to go in and adjust either of those, we certainly could. Yeah. Sometimes when I buy, I start at the loss. Can you help me navigate that? Let's see, Louise, when I buy, I start at a loss. Let me tell you what I think you're saying is that when you initially get into the trade and it comes back and it's filled, it might show you at a negative position that it's showing you at a losing position. And typically that's because of the spread, right? The difference between the bid and the ask prices. And so if it's a small number, then that typically means we've got a tight spread, which we love. If we look at this as an example, 1340 by 1390, that's a 50-cent spread. I'm like, oh, 50 cents, that's a lot. But percentage-wise, if we calculate that out, 0.5, let's see here, 50 cents divided by, what was that, 13, it's changing around now, 1390. So we'll say divided by 13.9, that's only 3.5%. 3.5% is awesome. We feel good about that. Okay, it's not a huge spread between it. It's only 3.5%, which means it'll make it a little bit easier for the stock to make that up. So I think that's what you were asking there, Louise. If not, tell me again. Yeah, you're saying out on the P&L. You say you have troubles with stops like this. I get stopped out when the stock is going up early in the session, and that could be the case, and that is one reason some people don't like to put stops on. Okay, I wasn't planning to put a stop on this, but because somebody wanted to say it, I thought, okay, that's fine, we'll do it, not a problem. So we're going to go ahead, we're going to send this in, and just for fun, I'm going to see if this is adjusted too much. Okay, it's up to 530 now. We'll put it in for 525, and if we don't get filled by the end of our class, I'll adjust it so we get filled on that. All right. Any other questions with that? Because you can go and change that at any time. But you're right. That's one thing with option prices. First thing in the morning, man, sometimes they are popping all over the place, right? you might see them go up and back and up and back and up and back, and you're just like, whoa. And that is why some people with verticals don't like to put in stops. Okay, let's look at another scenario here. Let's come over here to SLB. Now, interesting thing on SLB is over the weekend we had the situation develop in Venezuela, right? I don't want to make this become political, okay? But it was as an event that triggered a lot of oil stocks, some oil stocks, not all of them, but the servicers, a lot of them to pop, okay? Pop up here with a move. And what we're seeing here is it's pulling back from that. And then we have what looks like kind of a reversal candle here. We might call this one a harami. A harami in Japanese, because it's a Japanese candlesticks that kind of all these names come from, it means pregnancy. And so this is like the pregnant woman here, and this is the womb. It's contained all the way within the body of that previous candle. And it can be a reversal candle. It's not guaranteed to reverse. That's kind of what it looks like. It's not guaranteed to be there at the end of the day either. We're pretty early in the day right now. So that's what it's looking like now, but not guaranteed to be there. But we're going to go off this idea that these moving averages are going up. We're seeing this little bounce. It's not really making a hold that close above the high of the low day, but it's making a big enough move that we're gonna look at that bounce for an entry on that. All right. Let's see here. I was trying to decide, George, what you were saying here. A jump can put a market order on an option using a stop trigger on underlying. Yeah, you can put a stop loss on a stock based on the price of the stock versus the price of the option. Absolutely, you can do that. We didn't do that in our last example. All right, we'd be looking for a bullish move here. Let's go to the trade tab. Let's see what our possibilities are. Now, this one's already traded 4.4 million today, which is nice. Okay, that's trading that amount. That gives us probably lots of open interest. Look at these thousands of contracts. Oh, doesn't that give you warm fuzzies? Gives me warm fuzzies, right? See so many contracts and see a spread like this, 256 or 250 by 256, so a whole 6 cents. That's probably less than the 3% that we saw on the other one. Okay, so pretty efficient. Not as much slippage can take place. Okay, we don't have to be as perfect with our order here. Now, this is nice because we have $2.50 increments. This is a lower price stock. Those of you with a lower price account might appreciate that. We're not going to compare it to a long option, but just know if we did a long option here at 256, might not be too bad. But again, we'll come out here, we'll say buy vertical. And then depending on how big of a movement we might want to see or expect, will help us determine how far we want to spread this out. So it's a $2.50 wide spread right now. 45, does it look like it would take much for it to get to 45? I'm going to put my mouse at 45 here on the chart. That's where 45 is, pretty close to that, all right? Does that mean the stock has to move a big deal? Probably not a big move, but it does have to move. It can't just sit there and do nothing. Although if it does sit there and do nothing, that option that we sell will really help create a nice little buffer there that it will not erode tremendously. Okay. Now, that's I'm going to say a pretty conservative move. If somebody wanted something bigger, they could come out here to 47.50, I think was another option, a little bit further out of the money, but then we're looking for a fairly significant move. And if you really thought the stock was going to move a lot, you certainly could do that. We're going to be on the more conservative end on this trade. Okay. We're going to say, okay, it needs to have a little bit of movement. All right. Now it's traded at $1.22. So we'd be risking $1.22 to make what? Essentially $1.28. Okay. Our $1.28 would be our max theoretical gain. So let's grab our calculator. Let's do the same thing. What if we can get a percentage of $1.28. Let's go with 70% again. Okay. You don't have to use 70. We'll just use 70 on this example too. And let's say, all right, that would say if we can gain 89 cents, almost 90 on the trade, get us out. Okay, so we're going to add that 0.89 to 1.22. That says, all right, we want to get out at 211. Okay, that would be our point. We're not going to hold out all the way to 250. We're going to be happy campers if we can get out at 211. How many contracts could we do here? Let's write 211 over here for a moment. If we have 122 to risk and we can risk $2,000, we can probably do a decent number of contracts here. So let's take our $2,000, divide that by 122. We can do 16 contracts. Now, is 16 contracts a lot? Not compared to 9,066. Would still just be a very small number in these number of contracts. Okay, so we are going to position size for that. We're going to do 16 contracts. We'll do a first trigger sequential. We'll create an opposite order. And this time we're only going to put it in for the target. We'll monitor this every day. We'll go back. We'll look at it. We'll see how it's moving, what it's doing. And if we need to make an adjustment, then we would. Okay. What adjustment might we make? Suppose the stock comes up to here to our 45 pretty quickly. We might not be up in the trade a whole lot yet. So we might go, okay, it's gone there. Let's let it go some more. Okay. What if it goes some more, say it comes way up here and then maybe it starts hitting resistance, and earnings here are not until the 23rd, but knowing we might want to be out before the 23rd, maybe it comes up here right at resistance. Maybe it looks like it's going to start coming back down. Then we might say, okay, we'll adjust it. We're put it in for 70%, but if we don't get 70%, we'll take it whatever percent it is, because there might not be enough time now for it to come down and rebound before the earnings comes. Okay, so that's an example of when we might consider changing it. All right, we're going to go confirm and send. And notice on our max loss here, 1936, it'll keep us below that 2,000, which we want to do. All right, we're going to go ahead and send this off. Now I'm going to do a grouping for these, the trades that we do in our class, and we'll keep them together so that we can keep track of it. All right. Next up, how many of you have attended a live event? I was looking in the chat, and it looks like Barb was chatting with somebody about the upcoming Dallas event, which I think is this coming Friday and Saturday. That would be tomorrow. How many of you are going to be in our Dallas event? I'm just curious. If you are, let me know. I'm not going to be there, but I want to know if you're going to be there. And I'm going to head over here to my browser. Now, some of you are going to say, well, how can I find out about these? How do I know when they're coming up? I've logged into my Schwab account, come over here to Learn, and then come over here to Schwab Coaching. And then it's the in-person events that we're interested in. Okay, so on our in-person events, we can view the calendar. That comes up. Oh, look at that. We're doing technical analysis and option strategies. So technical analysis will be Friday. Option strategies will be Saturday. If you're in that area and you didn't know about it and you want to head over, I'm not sure how full it is, but we might be able to squeak you in, right? If you try to register and it's full. But then we'll be in Washington after that, Sacramento after that, Atlanta after that. You can see we're hitting some major points where we have a lot of clients. There's Schwab clients that could take advantage of these in-person events. And if you go, there's a good chance Barb's going to be there. Barb's not at all of them, but she does attend quite a few of them. And it's a nice opportunity. People just love them. That's all I can say about it. We teach you good, we feed you good, we pay your parking. It's like, good grief, who does that? Okay. So if you want to take advantage of that, whatever it might be, go hit on the Learn More, and then you can register from that next page it takes you to. Now, the other thing I want to remind you of is to subscribe to our Trader Talks YouTube channel so you can find our content. I subscribe to a lot of different YouTube channels that are kind of like podcasts, and it really helps me find where I want to go. You know, if I've got 20 that I'm subscribed to and I want to find it, yeah, it makes it really easy for you to find it. Okay. You can come to a playlist. You can see what we call our bite-sized content. These are real short videos. They're less than 10 minutes, where we're kind of just teaching you a concept. This last one that Barb did say is what is a piercing line? We talked about that candlestick pattern here today, even though it wasn't a perfect piercing line. And I did this one here, allowing the Thinkorswim charts to find your candle patterns. I don't know if you knew that it could do that for you, but it can. Okay, so little short videos to maybe help you out with a skill of some sort. All right, let's head back. Are you going to have chocolate chip cookies? Ooh, Reggie. If I were in charge of the food, we definitely would have chocolate chip cookies. I cannot guarantee that there will be chocolate chip cookies, but there will be some sort of snack. I don't know what the snacks have been lately. Maybe Barb can tell you, because she's been to a workshop more recently than I have, to know what goodies they might be serving. But it's probably different hotel to hotel, right? Whatever it is that they have. If I were in charge, we would be doing the chocolate chip cookies for sure. And now you've just made me hungry. I might need to go get one of those today. All right. I want to look at something let's see if it's still bearish today. Was looking at a position here with Dell Technology, and it looks to be breaking a significant support area. Okay. You can see I've got this kind of this grayish area so that it's not a thin line. It's kind of an area. And look at this over the last year. What is that? About 120? Looks like it's been bouncing there, right? Came down close to their bounce, came down close to there a couple times their bounce, came down here for a couple of days bounce. Here, looking like it's not bouncing, looking like it's breaking through the support level there today. What are our moving averages doing? They're both headed down, right? Definitely a downward trending stock. So we're going to look at a bearish vertical on this one. Okay, so let's come over here to the trade tab. Here's our Dow. 5.4 million shares traded today. Weekly's not so liquid at this point, so we're going to use the February options. And generally, 20 to 40 days worth of time is what we're seeking. Sometimes it has to go a little bit over 40, not a big deal. Sometimes it goes up to 50. Okay, just kind of depends on how they shake out. All right. On the bearish side of things, we're going to come over here to the put side. And on this, we've got $5 increments. The price of the stock is trading 116. So 115 will be our leg that we'll start with. And we're just going to do a buy a vertical. I'm going to check something real quick. I was just looking to see if we got filled on this guy. Okay, those are our OCO orders. So I guess we did get filled on that. That's all I wanted to check out there real quick. Okay, back to our trade tab. 205. So we would be risking 205 to make what? $5 minus 205, now 208, right? It's going to be what, $3 or $2.92 now. Okay, that would be our max theoretical gain. This one is a little bit more aggressive. We need it to drop all the way down to 110. Right now it's sitting at, 110. And right now it's sitting at 116. So it needs to move at least $4 for us to get down in this range of 110. Now, with the February options in 43 days, probably is ample time to do that. One thing nice about Dell is we won't have an earnings period coming up. They announced here the last time in November, so they're probably not going to be till the end of February before they start doing their earnings. Okay, so we don't even have to really worry about that. If it takes the trade a little bit longer to develop, that's okay. We're fine. We're not worried about getting out. I'll take a look at that stay gold. I got in and out on SLB. I need to check that. Yeah, I'll have to go back and check that, see what I did there. So on the trade tab, and let's bring up our calculator. It was getting close to $2 now. Pretty much risking $2 to make $3. Okay. I'm just going to put in $3 here because it's pretty close. And what if we could get 60% of, 65% of this one. Okay, if we could get 65% of this one, I think that clicked in a little too quickly here. So 2 times 0.65 is $1.30. We're going to add $1.30 to $2. $1.30 to $2. I put in the decimal there wrong there, but $1.30 plus $2 would be $3.30, right? And so on that, let's do that. I'm just going to make sure times 0.65 is $1. Okay, now $1.95. Okay, that's better. $1.95 plus 2.03, $3.98. So when it gets to around $4, we're willing to say, happy campers are we? Let's get out. So we'll do that at $3.98. And how many contracts can we do? Got several contracts here. We got several thousand. So tight bid-ask spread. We love to see that, right? And so on this, let's get that back. Here we can risk $2,000. Let me just put this in here, 3.98. So I go back to the right number. Clear this out. Let's go $2,000. This is an easy one. Divided by $200. We can do 10 contracts here. Okay, so we are. We're not a big majority. We've got oodles and oodles of open interest there. We're going to do a first trigger sequential. We are going to do a create opposite order. And we're going to put that in there right there, 3.98. So if it gets there quickly, we're happy. If we need to go out and adjust it, let's get the right number there, 3.98. There we go, almost $4. All right, GTC, we won't put a stop in this. Oh, good, it's getting a little cheaper for us here. All right, let's go ahead. We're going to get those filled. We've got 3 long verticals that we're going to track. We're going to track this bearish long vertical on Dell. We did a bullish long vertical on, long call vertical, I'll say, on Capital One Financial. And then we also did one on Schlumberger. Letty wants to know if we have a sample in investing or trading plan that you can follow on this. I don't have one right now. However, that is something that we can look to in the future. Because I'm out of time, I'm going to have to figure out what happened with SLB here. You guys are letting me know that we went in and out. I'm going to have to redo that order. So I'll do that, redo that order on my own time here. Might not fill at 121 again. And then I'll figure out what I did there. I probably forgot to change the number. The number didn't stick that we were going to stick in there. I think that's probably what happened, why we got in and out so quickly. All right, you guys. Coming up next is a new class we haven't had for a long period of time, but we're starting it up again. And it is dividend stocks. There may be several of you that want a portion of your portfolio dedicated to dividend stocks. So right at the top of the hour, Cameron May is going to be teaching that. Now, I did not see any surveys out here, so you're not on the hook for any surveys, but if this was useful and helpful for you today, go ahead and hit that like button on the way out. Follow Barb and I on X, Barb Armstrong CS, Connie Hill CS, make sure it's that verbiage exactly, because once in a while we get some imposters out there that kind of tweak with that verbiage, right, with those exact namings. And so you got to kind of check that, make sure it's really us. We're not going to petition you or ask you for anything, okay? Somebody reaches out to you whose name is Connie Hill CS variation, it's not me. We don't do that. All right. Love to interact with you on X. Of course, subscribe so you can find our content so much easier. And if a live event is coming up near you, go ahead, get registered. You will thank me and Barb once you go through that. You'll be happy camper that you went. All right, you guys. We will take a quick break here now. We'll see you soon. We'll check on those trades next week. Have a great rest of your day.